DraftKings only about $5 higher than its 52-week low. This, from a technical perspective, is setting up nicely over at DraftKings. Do you buy the dip? We'll talk about that and more on today's show. What is going on, investors? Time to talk about a DraftKings Incorporated, ticker symbol DKNG. This company's got a $19 billion market cap. We'll talk about more of that here in a second. And we've got a short interest of about 9% on this one. So there is some smart money really betting against this company. And I'll show you why when we get over to the financial. I tell you what, smart money's not any smarter than any of you and I. They just happen to look at the exact same stuff that we're looking at on today's show. So if you want to know what smart money is looking at and the reason why they're shorting this stock, I'll show you exactly what these guys see and exactly what they don't like. Now, let's start with the good. The Q3 revenues came out over at DraftKings, $213 million in the quarter. That is a solid year-over-year revenue growth. I tell you what, when you got this type of short interest, you better be growing that top line by the mid 60s, I think, and that's what DraftKings essentially did. Now, they did miss by about $25 million. I don't think that's what's sending the stock down. Now, I am recording this during the trading day. There's still 4 or 5 hours left to go in the trading day on a Friday, but the stock is trading down by about 1.57%. I think more of it has to do with a little bit of guidance, not only for the rest of this year into Q4, but also next year, 2022. It's a little less than what I would think is impressive. We noticed that their 2021 revenue is going to come in between 124 and $128 billion worth of revenue. The street was expecting on the higher end of that to $1.29 billion. Now, for 2022, this is for the upcoming 4 quarters. They are currently in Q4, but next year, for the whole of year of 2022, the company is only expected to come in between 1.7 and $1.9 billion. That is up over where consensus was at about $1.8 billion, especially on that high end. And that is 43% year over year revenue growth. But again, I want to remind you, this company is guiding to the highest of high end, about $2 billion worth of revenue all of next year. They've got a $19 billion valuation. So it is, I would say, a little bit rich from a price to sales basis over at DraftKings. The other thing that you have to factor in is what smart money is factoring in when we're looking at DraftKings. Man, this company is just absolutely burning money like a problem gambler. Take a look. The last 3 months ended here in 2021. We had revenue coming in at that $212 billion. That is up by about $80 million year over year. Okay, you were sitting at 132, but here's what I want to show you. Here's just sales and marketing. Okay, we're not going to look at any other costs just yet. I just want to point this out. So we grew our top line revenue year over year on a quarterly basis by about $80 million. Take a look at what we grew sales and marketing by about $100 million. Now, I do understand this online gambling business. I do understand DraftKings business very well. I had a website. I made lots of money off DraftKings referring players to the platform. I understand that their marketing costs are up front and they get a lifetime value on that player that might gamble with them over many, many years, maybe even many decades. So I understand that they are fronting a lot of this cost to acquire players, but all our other costs go up as well. So off this $212 million worth of revenue, take a look. We had $303 million just in sales and marketing expenses, and we had general administrative expenses. Just general and administrative expenses exceeded our revenue. So both our marketing and our G&A cost exceeded revenue on their own, let alone the cost of that revenue. This is not actually a very high margin business. You spent $170 to make this $212, and you've got product and technology cost as well. That gives you a loss from operations coming in at $546 million. Okay, that is what short sellers are seeing. They're seeing mediocre, in my opinion, mediocre revenue growth. Okay, 43% year over year revenue growth is good when you're profitable or when you're turning the corner on profitability. It is not good when you are bleeding money year over year. Last year, you lost $348 million. Now you lost this $546. The company will probably lose in excess of maybe $600 or maybe even $700 million next year. You see, for the 9 month, same story. Okay, you lost $1.19 billion. In fact, the losses are accelerating over the last 3 months, and I don't think this company is anticipating anything different. So from a balance sheet perspective, they do have $2.3 billion worth of cash. The other thing that I think is really positive is on the asset side, they show this cash reserved for users that came in at $480 million. That's up from $287 just in December. So we've bolted on almost $200 million worth of cash that our users have sitting on the side. I like that, because what gamblers tend to do with cash is gamble it until they lose it all. Okay, that's what most sports bettors actually do. They lose all their money. And so most of this money I would have factored in will eventually go to the cash, or at least the revenue side over at DraftKings. This is a company, they have this $1.2 billion worth of convertible note. This is a company that's going to have to continue to raise money, because I just showed you from an earnings perspective, a net income perspective, this company is losing money. I'm sure when we factor in that some of this is stock-based compensation, we're still losing money. Okay, the sales and marketing cost, you are still having to pay cash money to run all those TV ads on football games, baseball games, in stadiums. Okay, those people don't always take stock of DraftKings, although they have created some partnerships there. All things being considered, this is a company that I would like to own at a smoking good deal. Okay, do I think you're getting a smoking good deal at this price? Maybe, maybe not. Here it is from a technical perspective. I mean, like I said, we're recording this at about 9:30 a.m. Pacific time, so there's still about 4 more hours left in the trading day. Who knows how this one will trade? But right now, we're between $42 and $44 on this one, and that has been a very key technical level over at DraftKings. Notice we bounced right in this box, bounced again. This was earlier this year in the summertime, and now here we are again retesting this $42 level. It makes me a little nervous the more and more you test these levels, but if it were to bounce off this level, it would make me confident that buyers are stepping in. The reason why I get nervous when we test these technical levels is you can go pull up a chart of Peloton today. It retested a certain level, and then once it broke, it went way down, and that's what I would actually expect with DraftKings. If we were for some reason to break through this $42 level, maybe even lower than that, about $40 per share on this one, if you broke that, I think you have a very high probability of coming down to the low 30s, maybe $32, $30 per share on this one. That would make the valuation even more attractive. You shave off that much more. You also have to factor in that this company will likely do dilutive fundraising, which will impact your market share and your market cap on this one as well. So I like this company I just gave you kind of the bear case outline, and I'm kind of talking up the Smart Money's book by talking down this company and talking down the reason why they have a 9% short interest in this company. Now, there is bull case scenarios. Okay, from a technical perspective, you have a low here, a higher low, and we better not go much lower than 42 on this one. But all of a sudden, from a technical perspective, the shorts will be jumping up and down, thinking, well, we're probably coming down here to 40. If you break 40, like I talk about, that's the bear case. On the bull case, this $42 level holds. In fact, the stock is bouncing a little bit at this level, up to about $44 per share. And if we can get above these level, right at about $50 per share, which is about $6 or $7 higher than where the stock is right now, well, that would, in my opinion, say, hey, this level held. And then if you can get above 50 on this one, there's some green sky above it, okay? And I think we could retest at least these highs that we made right here back in October, and then also back here in last year in October and November of last year. That would be right at about $62, $64 per share. So I think if we can get above 50 on this one, I think you got $10 of run on this stock more than likely. Unfortunately, if we break right here, I mean, we are like on a teeter-totter on this one. And depending on how aggressive and how much you want to, I hate to use the word gambling when it comes to stock, but you are kind of gambling at these levels that they hold and they go higher. And then not only they go higher, but they break this $50 level as well to give you strong upside on taking that kind of risk. That was DraftKings. I think from a technical perspective, very interesting spot. If this stock were to pull lower and we start seeing lower prices on this one, the news gets negative. They have to do a following offering on fundraising. I mean, this company is going to have to keep fundraising. Okay, that's just in the DNA of this company, at least for the next couple of years. They've got to fundraise. Their revenues and their profits certainly aren't going to grow over the next year or two. In fact, that's what the company is not guiding towards. So we could see a drastic drawdown in this stock. And if you do do get a drawdown, I tell you what, from a valuation perspective, could start making even more sense. You could shake out some of these shorts that make their money, and then all of a sudden the stock could start rising, and then the kind of the dumb money that comes in and shorts it at the end gets squeezed out, and we have massive price increases. That's what I see over at DraftKings. Hopefully you guys enjoyed this video. I'll be back in soon with more. Have a great weekend. Good luck with your investments.